Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we are going to talk about price patterns. So last week we talked about flags. Today we're going to talk about the rest. So, what would the rest include? Well, it might be a head and shoulders pattern. It could be a channel. It could be a triangle or a pennant pattern. It could be a cup and handle or an inverted head and shoulders. And if you don't know what any of those mean, you're in exactly the right place because this is Getting Started with Technical Analysis. So I'm glad that you're joining me. I see a lot of the usual suspects here. So hello to Paul and JV and Jay and Richard and the rest of the gang. Thank you all for tuning in. It's great to have you here. We also have Mr. James Boyd here in the chat. And all I can say is, I love a man with a plan. And today, and I said, don't ever tell James that. But, today in his earlier webcast, he just talked about having the discipline of, trading with a plan and being consistent in, applying rules like position sizing and, max loss per trade, max risk per trade, and all of that good stuff. So, I mean, there are webcasts that are going all day long, and I hope that, I know that many of you take advantage of a lot of them, and kudos to you for that. So, but today we're going to look at price patterns, and we're going to look at how we can use price patterns to help us make informed decisions on when we enter trades and perhaps when we exit trades, or, it might help us set a target for when we might choose to exit. And in case something goes wrong, it can help us, define when we would want to get out. Okay, so yeah, glad to have you all on board. If you are not following us on X, you are missing out because Mr. James Boyd is a pretty prodigious poster. So am I, at Barb Armstrong CS and at James Boyd CS. You can also now find us on LinkedIn. So you can wander over there and follow us on LinkedIn as well. Keep in mind that if we look at an options trade, they carry a high level of risk and aren't suitable for all investors. Everything that we're doing here is for information and educational purposes only, none of it to be construed as a recommendation on the part of Schwab or myself. We are using the paper money software application on the thinkorswim desktop platform. And know that, there are some nuances and differences, and I'll point those out as appropriate between paper money and a live account. But know that if we use a stop loss order, there isn't a guarantee that we'll get out at the price requested. So we want to keep that in mind also. I've designed this to be taught in kind of loosely in about a 9-week rotation, and then often we'll throw in 3 or 4 extra topics like, Fibonacci's or Bollinger Bands or the things I wish I'd known about trading when I started, that kind of thing. But, this is kind of our rough pattern, and we're kind of combining today pennants and channels and reversal patterns. So if there's a particular stock you would like me to look at, feel free to type that into the chat and we might be able to work that into our examples. Okay, so, we're going to look at some of these price patterns, and then we're going to spend a bunch of time on the charts, looking at different price patterns on the charts, because I think this is, like, at least for me, when I was starting out, this is really what brings it to life. So when we look at price patterns, they're really created by drawing lines or visualizing lines on your chart. And so we're looking for, different diagonal lines. And sometimes these can be, oh, dang it. Somebody asked me to check and make sure that I just posted something on X. And so my drawings were still up there. And yeah, I was warned. Dang it. Don't you hate it when other people are just right like that? So let me adjust my drawing tool now. Lord love a duck. Okay, so there's our price patterns. And, we're looking for horizontal and diagonal support and resistance. So floors and ceilings. And those can create different shapes. So it can be a rectangular pattern, a triangular pattern, a wedge. And I look later today on X because I'll be posting some kind of summary sheets. Yeah, somebody mentioned Starbucks, and that's already on my list. And someone else mentioned NVIDIA. Okay, I can add that. Yeah, yeah. And so, and these work in any given time frame. Because I get this question a lot. Would this work if I looked at a 10-year monthly time frame or a 5-year weekly time frame or a 6-month daily or, a 1 day, 1 minute? The answer is yes. So it can appear in any time frame. Okay, short, intermediate, and longer term. And some patterns, one might argue, most patterns can create entry and exit signals of some sort. Sometimes it's for swing trading, some it might be for trend trading, some might be for, just trading with a target. So, and as with support and resistance, we can use these price patterns to help us identify targets, okay, to both exit for a profit or if the trade goes wrong, choose to close out the trade. And it's much easier, I have found, to decide when you're getting out of a position before you get in, whether the trade goes for you or against you. Because the temptation is when a trade starts pulling back and you start losing on it, we tend to start, trading based on these 4-letter words in the world of trading, like hope. Like, I hope it will come back up. This is not a strategy, my friends. So, and we don't want to chase something. If we're disciplined about our entries and exits, then we don't have to worry about the fear of missing out. That is another 4-letter word. And the last one, and there's no like throwing tomatoes at me or anything, but love. Like, I love this stock. I love this company. I know the stock is going down and I placed a bullish trade on it, but I love it. Well, you can love it from the sidelines, my friend. That is not a trading strategy either. Okay, but we're talking price patterns here. I'll get off my pedestal now. Okay, so when we look at triangle patterns, these tend to happen when we have a series of, whoops, I'm skipping ahead here. These tend to happen when we have a series of consolidations in the form of lower highs and higher lows. And when we have something that's been uptrending, are we surprised when we go through a period of consolidation? No. But and the same thing can happen on the downside. We could have had a stock that's coming down and then, it will form a consolidation pattern. It could be a sideways pattern and we'll look at other ways it might consolidate as well. But often, we'll go through a period of consolidation, and what we as traders are looking for is for it to break out one way or the other. And then, do we have to wait? Well, no, sometimes a trader might trade, and we've done this, I think, on Apple not too long ago. We said, well, it's bouncing, so let's buy something here and we'll put this in as a target. Or even do a shorter term target. Like say, well, if this stock moves $7 in an average day, that's, over the last 15 days, we're going to buy it here. And if it goes up this much, we'll get out. So there are ways to trade within a pattern sometimes as well. But, the trend, it can be bullish, it can be bearish, it can be, time frames can vary, but when we're looking at, say, a 1-year daily chart, we want to give it at least a month to form. Some would say, the more powerful the consolidation, maybe sometimes it can be 2 or 3 months. I mean, NVIDIA went sideways from September all the way till April. So that's September, October, November, December, January, February. I'm counting on my fingers, doesn't that like instill great confidence? Like that was like 8 months. Yeah. Yeah. So, we have a strong trend and then a period of consolidation. And the expectation is that if you're coming into from an uptrend and go through a period of consolidation, the expectation is that it will more likely break out to the upside than the downside. But until we see that happen, until we see either a break of resistance or a break of support, we're not laying our money down. Okay. And our potential target here on a pennant pattern, we might measure this distance. And if we say, okay, this is $10, then we're expecting how big a move to the upside when it breaks out? We start here and say, we're going to expect that to go $10 to the upside. So that's how we might determine a target on that. And then where might we put an exit? We might say, well, we're expecting this level here to hold. So if it goes below that level by 2 or 3%, we're going to consider that to be an exit. Okay. So that's our first pattern. Now, what about a channel? Well, like I said, we saw this on NVIDIA where it went from September to April, and it had been uptrending, and we saw this channel. In the case of NVIDIA, it's now breaking out, and we'll go and look at this on the chart, but it's broken out. It hasn't gone screaming. It's kind of, it's like it was exhausted getting through this resistance level, and it's still kind of in this general area. But the trend, again, we can see this happen after a downtrend or an uptrend. And it can occur in any time frame. And what we're seeing is a series of similar support and similar resistance lines, similar floors, similar ceilings. And what we're looking for is a break of support. Now, are there other ways or a break of resistance? And so with NVIDIA, we saw a break of resistance. Now, are there other things we can do if we trade options? Well, absolutely. So we could do something called an iron condor here when something's busy going sideways. And an iron condor is a trade where we're doing a short put vertical down here. I call it a credit spread sandwich, where when it comes down and bounces off the support level, we could do this type of trade, a short put vertical, and then we're adding a short call vertical, which means we want it to stay below here. And the short put vertical says we want it to stay above here. And as long as it stays in the middle, we're cooking with gas. Now, some might say, well, I don't want to do that. I don't trade options. So what else could I do? Well, you could buy shares here and say, when it comes back up to this resistance level, I'm going to exit the position. I'm going to take the money and run. And then if it comes back down here and bounces, so like on this day here, I would buy it again. And when it comes up here, I'd sell it and buy it again and sell it and buy it again. And if you sold it here, you might say, oh, shoot, shouldn't have sold it because now it's come back up. But, that's a way that you could trade a rectangular pattern using stocks or using options, or you could buy a call here and then close it out when it gets up here, and then buy a put when it rolls over and close it out when it gets back here. So there's lots of ways to skin the cat. I don't even know where that expression came from. Let's forget I said that. But, and again, when it breaks out, if we want to target, we could again say hey, if this is $10 wide, if it breaks out, I'm expecting it to go $10 to the upside. Okay. Yeah, so Jay is saying, they don't stay in for the love of a stock. They make a plan for every trade, and they, have a plan, trade your plan. Like I said, You know, having a plan is a powerful tool because then it keeps you from making emotionally based trade decisions, which typically is not your best. Okay. So, you know, here's a bearish pattern, a double top. And so with a double top, what we're seeing is a stock that has come up and hit a new high, maybe, like it may not be a new high, but a recent high. And then it comes up and it does the same thing again. So I live in between two canyons. So this is like Big and Little Cottonwood Canyon. And then if it breaks to the downside, well, you end up in Draper. Yeah. So yeah, and if this breaks again, like if this is $20 wide in height, if this breaks, and then, you know, if you're waiting, if it came back to retest, you'd expect it to come down $20. That's where you might put in a target. Okay, and your entry would be the break of support. And our target would be based on, you know, support minus resistance. Okay, and again, this can happen in any time frame. Okay. Oh, I've missed some. Double top, oh, double bottom. Okay, so we've got a double bottom here. That's just the reverse, right? So we've got our double bottom. We could also have an inverted head and shoulders. And again, we're going to measure this the same way. So if something's been falling, sometimes we end up with a big V pattern, but it's not uncommon. Whoops, let me come back here and then we'll go over to the charts. Just a sec. Okay. And I'm going to hit us with a couple of patterns here. So here we could have a double bottom. And again, if this is $10 wide, you know, a potential target might be $10 from where it's broken out. And we can see it came out, retested, and then it took off. We could also, you know, have what we call an inverted head and shoulders. And every inverted head and shoulders, and we'd measure it the same way, and every inverted head and shoulders, although not every cup and handle, you know, if it was coming down, it could come up like this and then break out and maybe retest. We call that a cup and handle pattern. And we measure, you know, a potential target the same way. Okay, so these are all different patterns that we can look for. And when we look at channels, they don't all have to look like this. They could also look like this. They could be going sideways. And is that a tradable pattern? Yes. And what might we look for if something's been downtrending? Because we've seen a lot of this lately, is a diagonal resistance breakout. James talks about those all the time, you know, like we all do. But it's interesting because sometimes you can't take 3 steps without tripping over a bull flag. Other times, like it's like every chart you look at, you're seeing inverted head and shoulders and cup and handles. And we're seeing a lot of these because if we come and we look at what's going on in the markets right now, let me just close this. You know, we look at the S&P 500, we were officially in correction territory, and then it kind of took off. And you know, if today closes about where it is now, we'll have a new all-time closing high on the S&P 500. The NASDAQ, similar. You know, so might we expect to see after this kind of pullback and period of consolidation, you know, similar moves on some of the charts and periods of consolidation. And, you know, did we have a diagonal resistance breakout here? Oops. Absolutely. Now that happened, weeks ago. That happened on April 8th. And so, if you said, well, I'm going to wait until it breaks out above this previous high, you missed a nice little run. But I mean, you want to trade your plan. Yeah. You want to trade your plan. But you want to also have the confidence of understanding um, these charts when you see them, right? So if we come and we look at something like Apple, and it's interesting because Apple's at the top of the Nasdaq, it's at the top of the Dow. So I look at Apple on the daily as I'm looking at charts, but we had this kind of a skewed double bottom, if you will, where it came down and came up. We had this diagonal resistance line, and this is like a big fat pennant pattern. If we come here and draw this line this way, and so now that this has broken out, how might you measure it? Well, you might say, I'm going to look at even being conservative from that 288 to 243. How, that's about a $45 wide pattern, right? And so you could say, well, I'm going to go from where it broke out, came out, broke out, retested. So if I say, well, this was around 266, if I add 45 to that, that would be around 310. So you might have a target, and I'd have to add some space. So if I draw a line here and say, based on this pattern, it could be 310. That's a potential target. Now, does it mean that if you place a trade, if you buy the stock, you have to place that target? No, like, and you see, it's not even showing on our chart. So to get that to show up, if we click our sprocket and come to our price axis, we can say, we want this to be 20% up. So now we can see it just right up at the tippy top. Well, let's make it 25. So we can see it. A little clearer. And if you're okay, like if we were to buy the stock, we could, we could put that target in, or we might say, what, sometimes it doesn't go quite all the way. Like maybe we make our target 307. So we could do that too. And, in this account where we have $533,000, we could say, okay, well, how big a position size are we comfortable having? So if we have 533,000, we could say we're comfortable with having up to 5%. So that would be 26,650. And, if you say, well, it could be, 5 to 8%, and you're comfortable doing, a slightly more, because this is 284, so it would be a $28,000 position. You might be willing to buy 100 shares. Now, do you have to buy 100 shares? No, you could buy 50. You could buy 1 share. But if we wanted to do this based on this breakout of a pennant, came back to retest and moved to the upside, the advantage of doing a 100 shares is that it then gives you the right to do a caller position where you're selling a covered call and buying a protective put. You have the ability to use options to protect your position or generate income maybe as the stock is going sideways. So we're going to buy 100 shares of this stock, even though it's up 2.6% today. And why? Because we had this, it's broken this diagonal resistance level and it's moving to the upside. And we're going to put that in as our target. Now, where might we put an exit? We might say, well, this 275 level here, old ceiling, appears to be acting as a new floor. So we could say, hey, if it goes 3% below that, let's exit the position. So 275 times 0.97, 266.75 would be our exit. So we're going to come to our trade tab. We're going to right click. We are going to buy custom with an OCO bracket. So we're putting in a target here of 310. Well, let's make it 307. And our exit is going to be 266.75. So how much are we risking? And just because, I just as soon let the system do the math for me, it says here, we want to sell when we're up $22.90, or if we're down $17.35 or $1,735. Now, if this gaps down, we could be out at a lower price. And in this account, we're saying we're willing to risk half of 1%. So that's somewhere over 2,500, because that for a $500,000 account, that would be 2,500. So we're within our range of acceptability, and we're going to put this in as a stock with a target. Okay. Okay. I'm just looking at the chat now. Somebody saying James has a special way of saying diagonal. He has a special way of saying a lot of words. Okay. So there's one example. Now, someone had mentioned Starbucks. And a lot of the stocks I was looking at just before we started, it was kind of interesting. It's like it seems like I must be hungry. We're having like a food related experience here. Let me just activate that, and I'll bring it down to the bottom of that candle. So if we look at this, and we're playing I Spy, what do you see? Well, if I'm playing I Spy with my little eye, I'm seeing an inverted head and shoulders. And, it's kind of, we've got a double shoulder on that side. A little hunchback of Notre Dame happening here. But, and how big a range is this? Well, 86 to 101. That looks like about $15 to me. And then it broke out and created a bit of a bull flag and a stiff wind, so kind of consolidated. Sometimes it's a lot of work to bust through a resistance level that it had hit once, twice, 3 times, 4 times. The 5th time it finally made it through. And the more times you hit a resistance level, kind of the harder it seems to break through. Yeah, Riceberg, you've got it. Cup and handle, like I said, every inverted head and shoulders has a cup and handle. And how do you measure? How is that different? It's not it's exactly the same. So where might we put our target here? Well, around 116. Could we make it 115? Sure. It's our trading plan. Where is it trading now? 105.72. So if we could make $9-ish a share, would that be worth our while? Well, that's got to be close to 9%, maybe 8.5%. If we look at this, so let's run the numbers, and the goal here, might be, as a short-term trade, we're on the other side of earnings. Obviously, the earnings report must have been strong because it gapped up and then kept on running, right? Yeah, and could you make your target less? Absolutely. So how else might you choose a target? And we're going to spend, we're looking at these trading patterns today. We're going to spend a whole day talking about Fibonacci's, but you could use Fibonacci's to determine a target. So we could come down here. This is just a little premonition of, a class to come. So if we went for the 161 extension, which is a target that some traders might choose, your target might be around 110 or 110.50. So could we use that? Absolutely, we could. Could we use a 1 ATR target? And so and what's 1 ATR? So I've got this on my chart, and it's saying, hey, in an average day over the last 14 days, this stock has moved about $2.57 from the high of the day to the low of the day. So I'm just going to put in, I'm going to, buy the stock or buy a call and say, when it goes up $2.57, get me out. Or if it goes down 2.57, get me out. So that's very short term. And if you don't have this on your chart, you can just come to studies and edit it and type in ATR at the top. If you want a more specific definition, you can then click on the little question mark there and it'll give you that information. But today our focus is on how to use these trading patterns. In this inverted head and shoulders pattern, we're using that. And this would suggest that our target be around that 115 or 116. So we're going to put in a target here of 115. So we're going to edit this and put in our target. And this is for the stock. We're going to make it 115. So if you just draw it somewhere in the general vicinity, then you can come in and edit it and make it look exactly like you want. And if you want your description to show up here, just say, I want to see this on the right. Yeah. So that's our target. So now how do we position size? Well, if we say, okay, I want to buy about, I can buy a position size up to 25,000, 27,000. I don't want to go 30,000. And again, if I want to maintain that opportunity, and it doesn't mean I can't buy 250 shares and then sell 50 or manage it a little differently. But how about we buy 200 shares? Now just a sec, where are we going to put our stop? So if we want to give this more latitude, and it is a stock trade, we might say, well, here's our recent support level. So I'm going to come back to this 101, 101.36 and go 3% below that. Now you might choose 2% or 5%, but that would be at 98.31 would be our exit. And why, you might say, well, like it just came down to here, why not make this our exit around here, around this 104, because then the probability of it being hit is going to be much higher. So if we put this in at 98.31 and our target is 115, we're going to buy 200 shares. I'm going to click our firecracker, turn it into a paper clip, and it'll link the quantities together. So we're going to make this 115. And this is going to be 98.31. So are we honoring our position sizing rule here? Yes. Because if we're risking 740, even if it comes down and hits our stop, and we're out, if it misses our stop and we're out lower, we're risking here about $1,500. And we've said we're willing to risk 2,500, and for the opportunity to make maybe $9.29 a share or $1,800. And so we're going to put that in our stock with target. And then you can put a note in here, target based on inverted head and shoulders pattern. So if you're looking at it and going, where did I come up with 115? This is just a note from you to you. So fire in the hole, we'll send that in. Okay, so let's look at some other charts. So we got going on our food craze here. There we go. So let's look at Yum. So if we wanted, we picked up our coffee, and here we have another pennant pattern, and we, we're on the other side of earnings. So we might want to come and look at some of the news on this, but it appears to be bouncing today on this support level. Now we may want to wait for confirmation and see, could this be a bit of a morning star type pattern setting up? So we'd be looking for a big candle tomorrow that goes halfway through this one. So we might just pause on that. But, it is possible to trade something within a pattern also. Okay. Or you might say, I'm just going to wait and see if it comes up and then breaks out. But so far this year, this stock is up, only 2%. How about if we look at something like Costco? Now, I have been supporting Costco low these many years, so I hope all the investors appreciate that. And it was downtrending. Like if we look at a 1-year chart, this was on the struggle bus, wasn't it? And then we saw this diagonal resistance breakout. It took off and it really didn't come back, did it? But now it's trading in a bit of a channel. And sometimes, you just kind of draw your lines to kind of lead the eye. But this one seems to be right now in a bit of a channel. We have earnings coming up, closer to the end of May. How about Booking? KMG. So Booking, was kind of battered a bit, wasn't it? Like this took quite a fall when the rest of the market was falling, but it hasn't had this deep this V pattern recovery that we've seen on the general indexes. And when we look at this, it seems to be climbing up the hill, but a little slowly. This just had a 25-for-1 stock split, which brought the price down, well, by a factor of 25. And has made it more affordable for more people to trade. And can we trade this within this range? Absolutely. Absolutely. So is somebody saying, what was my analysis on Yum? On Yum, we said, we can trade within a pattern, but we're looking for a confirmation from a candlestick perspective because we had a big down day. Today we've got, this candle of indecision. It's not quite a doji, but we're looking for a bullish candle tomorrow. So the analysis was wait. And this pattern, if we see it, would be called a morning star pattern. So if you're new to candlesticks, there is let's go out and look at it. So there is a trading plan and, sorry. If you go to getting started with technical analysis, there's a whole class just on candlesticks, but I've also recorded a whole bunch of short videos and they're in the getting started with technical analysis archives, but they're all nicely lined up here under the trade management mini sessions. So I'll put a link into that one. And the pattern that I'm talking about is, I just recently recorded it. What is a morning star pattern? So you can go back and look for that one. Okay. So that was that one. It was Booking we were looking at, BKNG. And so, this is similar. This isn't quite a harami. So this isn't considered from a candlestick perspective, a tradable pattern. So we'll want to look at, we might want to pause to have a higher degree of confidence that this level of support is going to continue to hold. Because others might not have drawn their line quite this way. I think what I did with this one, if I'm not mistaken, is I drew this line across the top and then I just said duplicate it and I dragged it down to here. Otherwise, I might have drawn across the bottom of these. So, the technical analysis, there's a lot that's kind of in the eye of the beholder, right? How about we look at ADP? Oh, yeah, I said we would look at NVIDIA, so we can go look at NVIDIA. before we wrap up. So when we look at ADP, I mean, this is down 18% year to date. You know, and I'm looking at a 6-month chart, and you know, it's still not anywhere close to the 100-day moving average. So, but we have had kind of this pennant pattern, and it has broken out to the upside. Now, today we have a down day, so we may want to wait before we consider doing something bullish, but this could be an indication that this pattern may be changing. And then if we come in and we look a little further out, we may say, well, I'm looking, you know, this could just be a continuation of this consolidation. Oh, come on, the stick, please. Let's see how I've got these lined up. So this could be forming, you know, an inverted head and shoulders, and this pattern just isn't complete yet. So we'll just have to wait and see. Sal, absolutely, you could do an options trade on booking, but we don't have an entry on booking, depending. And one of the things that we want to be is disciplined about our entries and our exits. So if we back the truck up here, you know, we look like Nvidia was obviously uptrending. I mean, it's been the talk of the town for quite some time. And then it kind of went a whole lot of nowhere, starting in September and right through like the middle of April. And so we were doing kind of that idea in trading a smaller account of trading that iron condor, where the expectation was that it might stay in this range. And it did until it didn't. And then it broke out and it's kind of hugged the line. And then we had a couple of big up days, and now it's back to this line. And so the question might be, oh, I've got to call those guys back. So the question might be, is this going to hold? It's flirting with this old resistance level. Is it going to continue to hold as new support? And so, you know, you might want to put an alert in and say, hey, if this goes back above 200, let us know. And so we could just right click here and say, here's an alert. Let me know if this goes back above that 276. And then you could say, consider a bullish trade. But if it falls, continues to fall, like if it crosses this line, it could come all the way back down here because it was in this range. It's kind of like back in familiar territory if it comes back below that kind of 195-ish mark. Okay, so, you know, this is just an introduction. We could spend all day looking at these things, and, you know, I'm tempted to do that, but our 45 minutes, it has come and it has gone. So as we wrap, I ask that you subscribe to the channel if you haven't done that already. If you could hit like, because it helps move this up in the algorithms on YouTube so more people can find this content, that would be appreciated. Follow James and I in the land of LinkedIn. Make sure you follow us on X, Barb Armstrong CS and James Boyd CS. And yeah, that's a wrap. Up next will be swing trading. So I want to thank James for being riding shotgun in the chat. Always a pleasure to have James on board. I want to thank each and every one of you for your questions, for your presence, and for bringing so much great energy to this class. And I also want to thank the guys behind the scenes. So stay tuned. Mike Fairborn will be here with swing trading at the top of the hour. Have a great day, everyone. Bye for now.